Hello, welcome to the European Open briefing for Friday, March the 17th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So after a pretty eventful week, things have quietened down on the last day of the week. The dollar, though, continues to drift lower after that not so hawkish FOMC meeting that we had on Wednesday, where the Fed failed to signal the possibility of a fourth rate hike this year. The euro is having one of its better weeks, though, following, of course, the results of the Dutch elections yesterday, where the far-right party lost out to the incumbent Prime Minister's party. And we also had some ECB comments which increased speculation that the ECB may raise rates before QE has ended. Other notable movers has been the pound, which got quite a bit of a boost yesterday after surprisingly hawkish Bank of England at its March meeting, and gold looks set to end the week near 2-week highs on the back of that rather dovish FOMC. But let's start with the dollar. We can see here in the chart the dollar index in purple and the dollar yen pair in orange. The USD JPY hit it dropped below 112, 113 level yesterday to 2-week low. It's since stabilized around 113.40. The dollar index, though, is at a 5-week low, and this is, of course, after a not so hawkish FOMC on Wednesday. They didn't. The Fed did sound more optimistic about the economy and about inflation hitting its target, but the markets, all of that had pretty much been priced in already. So the markets were disappointed that the Fed didn't signal in an even more aggressive rate hike path. And we did have some rather positive US data yesterday in terms of the housing starts, the Philly Fed manufacturing index, and weekly jobless claims. But all of that failed to do much to the US dollar, and also the Trump administration's budget, which was a pretty slimmed down budget, didn't really do much to the markets, as there was very little details about infrastructure spending or the possible tax cuts coming up anytime soon. Moving on now to the euro, we can see it's had a very good week. We had that big jump on Wednesday on the back of the Fed, which pushed the dollar down. And then early on Thursday, we had the Dutch election outcomes. And yesterday, we had those comments by the ECB Governing Council member Ewald Nowotny, who's the head of the Austrian Central Bank. Speaking in a newspaper, he said that the ECB has not yet reached a decision on whether or not they will raise rates before its bond buying purchases have ended. And he also said that the ECB does not necessarily have to raise all of its three main interest rates at the same time, saying that the ECB could also raise the deposit rate earlier than the prime rate, and all of that is boosting the euro. It hit a 5-week high early this morning of $1.07815. Now the pound is another gainer this week because apart from the Fed, we also had the Bank of England meeting yesterday where there was one dissenter, Christine Forbes, although she's due to leave the Bank of England's Monetary Policy Committee sometime this year. She voted for a rate hike at the March meeting, and there were signs that other members of the committee were also becoming more hawkish. In the bank's meeting minutes, it said some members noted it would take relatively little further upside news for them to consider that a more immediate reduction in policy might be warranted, indicating that perhaps the Bank of England could raise rates in 2017 after all, after earlier signaling that it would not be doing so. And adding to that bullish sentiment for the pound was the Prime Minister Theresa May's announcement that she will not allow a Scottish referendum for independence before Brexit negotiations have concluded. So that removes some uncertainty surrounding Brexit. The pound is doing rather well, currently trading at about $1.23. And finally, let's have a quick look at gold because it looks set to have a good week as well, currently trading near 2-week highs. Yesterday it jumped about $1,230 an ounce, currently trading around 1,227. We had one layer of uncertainty removed from the Dutch elections, but the weaker dollar and less hawkish FOMC, all of that have boosted demand for the yellow metal. But there's going to be several factors which could be influencing gold prices over the coming weeks, particularly the French presidential elections, and the Fed may yet become more hawkish if the US data continues to be strong. Plus, of course, with Donald Trump's presidency, a lot of uncertainty due to his unpredictability. So those are several factors to watch out for that could influence gold. And finally, let's have a look at today's economic calendar. It's looking like a very quiet start. We had very little data out of Asia, and out of Europe, we're only going to have European trade numbers. It's going to be a busy US session with Canadian manufacturing numbers, US industrial output numbers, and the University of Michigan's Consumer Sentiment Index. And also starting today, we have the G20 meeting of finance ministers in Germany, where the G20 might make some statements regarding trade and exchange rate policy, given that they've been very much in focus due to Donald Trump's criticism of other countries in terms of their currency interventions, and also the possibility that the US might raise import tariffs for certain countries such as China and Mexico. That's it from me. Thank you very much for watching and have a great day.